Welcome back. You're still tuned into Code View. Thank you for staying with us. In a significant development today, the Central Bank of Eswatini has released its much-anticipated annual financial stability review report, offering a comprehensive review of the state of the nation's economic landscape. The report, which is closely monitored by local policymakers, investors, and economists alike, assesses key risks to financial stability trends in the banking sector and the overall resilience of the economy. Economist Sanil Esbia joins us now to share insights on how this report provides key aspects to shape Eswatini's economic future. Very good afternoon, Mr. Esbia. Thank you for tuning in. I assume you have listened to the governor's report. Does it really provide key aspects that shape up Eswatini's economic future?
Thank you, Lou. Yes, I think the governor did present his report today, highlighting that financial stability within the country. And of keynote is we've seen that the statistics show that we've increased in terms of our aggregate financial stability index from 0.02 to 0.05 or 0.5 thereabout. That shows that we are doing something as a kingdom, and that shows that we are actually moving forward towards a more stable economy, and financial stability is actually key to those, Lou.
Yeah, he also spoke about SMEs. We know that SMEs play a critical role in economic activities in Eswatini, and also the reported losses at 23 billion Malangeni. What is the impact of this?
So basically, when we look at the profitability of SMEs, it's more of an issue that speaks to the underlying. We are, as a country, trying to move towards growing the economy, and you cannot be seen to be growing the economy if there are those losses that are being presented and that we are seeing coming through from the SME sector and basically the corporate sector. But you cannot then say that this is a sign of weakness or a sign of a very bad economy. If you recall, coming from COVID, we're coming from a situation or from a point where we had the price of Brent crude averaging around $90 per barrel. At that point in time, we're looking into the supply chain disruptions that we saw in the past couple of years, and we're looking into those cost of living or those inflationary pressures that are coming through from the fuel shock, those movements within the Red Sea, and those supply chain logistics globally. So I think that's what the domestic economy is still trying to grapple with, and still trying to deal with those supply shocks and those costs that became then a bit heavy on the corporate sector and SME sector to absorb. But we cannot say that it's one of those historical facts, but that in level of losses at 23 billion, that's still very high, signaling that going forward we might be grappling with more volatility coming through from the SME sector. And what that means is basically it means if the sector is not remaining profitable, then we are looking into job losses, we are looking into downstream and upstream losses, because SMEs don't exist within a vacuum. But with the improvements in the medium-term economic outlook, we do hope that eventually our SMEs should be in a position to bounce back.
All right. Another thing the central bank governor revealed is that financial stability indicators seem to have improved, with aggregate financial stability rising from 0.02 to 0.50 between 2023 and 2024. What could be the key factors to this?
So what we are looking at, Lou, is an improved medium-term outlook for the Kingdom of Eswatini. As we've seen, we've seen inflation moderating, and we've seen central banks also taking that a bit of a moderate stance from the Eurozone. We've been watching those news, and into the Asian markets, the Federal Reserve Bank in the US. So we've been looking at those risks, at those inflationary risks, and we've been following those trends in terms of what is happening in terms of the interest rates. So right now, a loosened monetary economic outlook somehow makes debt servicing a bit more palatable and more affordable within both the household sector, businesses, and governments alike. So it's those improvements that we are seeing in the overall global economy, with growth prospects also being upgraded upwards to around 3.2. So though we are seeing that monetary policy conditions such as inflation still remain above the target, but the indicators show that we are on course and economies remain resilient. If you're looking at the growth numbers, if you're looking at the job numbers coming out from all the major economies, including our economy, it does show that we are heading for much greener for a much greener or for a much safer economic lending. And coming domestically, if you look into the performance of the banking sector, our banking sector remains relatively resilient to quite a number of shocks because of the model in itself. We are using more of a collateral-based funding model rather than a model that looks into leverages and those bubbles. So when you are looking into the configuration of the financial sector in Eswatini, the probability of any bubble occurring is relatively low, though we still have those risks with unsecured lending. But then again, if you look at those unsecured loans, you will see that it's loans that are given to people with income, relatively stable jobs. So when you're talking in terms of that financial stability in itself, there is a bit of stability, and the economy is building towards shoring those up and ensuring that we are actually able to sustain and maintain that position as a country.
Still on stability, the governor says the banking sector stayed stable this year, stable and sound, and was resilient to shocks. How did this help the banks to, stay vulnerable to potential risks?
So when we're looking at the at the configuration of our financial landscape in Eswatini, you will realize that the central bank plays quite a critical role in bank supervision and also non-bank supervision. So we have quite a number of regulations in the country. For example, we know that 33% of all the financial assets that have been mobilized within the Kingdom of Eswatini must stay within the Kingdom of Eswatini. So that in a way also helps to make sure that we are not that much exposed to external shocks, but we are mostly, there is that balance in terms of our investment ratios and the investment portfolios within banks. So it is one of those things that we are looking into. And then also, if we look into the situation that we are just coming back from, even if you track back and you look into earlier in the year, you'll see that there was a relatively large high rate of non-performing loans compared to the current reporting period. So right now, when we're looking into the interest rates and the easing in monetary policy, that has somehow also worked towards decreasing that non-performing loan ratio within banks. So if we also look into the capital requirements that banks must actually keep with the central bank or keep in their vaults. So it's all those issues that come into play, and also to ensure that we exercise what we call responsible lending as a country, so that we make sure that when we give out money out there, it's money that comes back and it's likely going to be repaid.
Okay. So also in his presentation, the governor spoke of the South African economic challenges and how they can impact Eswatini. How can they impact Eswatini as South African economic challenges?
So one of the key issues that we are following regarding the South African economy is that high debt to GDP ratio, which I think the report states that it's sitting around 73%. That's way in excess of the recommended debt to GDP ratio of 43% or 40% by the IMF. And if you compare South Africa with other emerging markets or emerging economies, it's still way above that. And what we are then then looking into right now is in the current year in 2023, 2020, in 2024, debt servicing within South Africa sits at around 20% of total revenue. So that means 20% of everything that the South African government collects has to go towards debt servicing. So once we are doing that, that means there are other sectors which will not be able to get those funding. It's not going to go towards other sectors. And South Africa continues to be blacklisted on that on the AFTA's task force on 17 lines. They're showing that there are those risks in terms of ensuring that money laundering doesn't occur within the Republic of South Africa. So there's still that laxity around prosecution of potential money launderers and the legal framework thereabout. So what that means, that South Africa and Eswatini are so largely linked and so largely integrated through the CMA and through quite a number of the CMA, SACO, and our trade relations. So if South Africa gets that downgrade, and if the South African currency is not looked at favorably, and if the South African financial system and the financial stability within South Africa is not looked at favorably across the globe, so we essentially inherit those through our arrangement in the CMA and the interlinkages and the continuous integration of our financial system into that of South Africa. So yes, the debt crisis in South Africa is one that's been slowly looming, and we are hoping that eventually there will be a way out of it. We're hoping that the Government of National Unity will actually present something that is quite tangible, and we're hoping that when we see the government budget coming out February next year, it should actually give us clearer direction, and it should give a clearer direction in terms of what the South African government is going to do in terms of the debt crisis. And yeah, but obviously through those channels, we will eventually one way or the other get affected because of our interlinkages with the South African economy.
All right, thank you, Mr. Spear, for that analysis of the governor's report, of the financial stability report. After the break, he comes back for today's financial market analysis. Stay tuned.